How you doing, everybody? This is Kurt Henry at the Mortgage Center, and we are mortgage brokers. We work with multiple banks and lenders and just get them to compete for you to get you the best deal when you're getting a mortgage. And this is a weekly mortgage update just to let you know what's going on in the mortgage market. So in terms of mortgage rates, a 5-year fixed rate is in around 3.45% or so, and a variable rate is in around 2.6 or 2.55%, or in that range. It could be a little higher or lower just depending on the situation. And also just wanted to mention what bridge financing is. Sometimes there's questions on what it is and how it works. So let's just say you own a house and you're selling that house for, say, $250,000, and then you're going to buy a new house, and let's say the house that you're buying for $300,000. And let's just say that house that you're buying for $300,000 is you're going to do a down payment on that $300,000, and say your down payment is going to be $60,000. So what bridge financing is when the closing dates from the sale of your current house and the purchase of your new house, when those closing dates don't match up. So in other words, you're buying this new house for $300,000, and let's just say your closing date on that is going to be January 30th. And let's say that the sale date, the closing date on the sale of your current house, isn't going to happen until February 15th, just for example. So on January 30th, when you take possession of your new house that you're buying it for $300,000, you know that on January 30th you need that $60,000 down payment, because that's what your down payment is that you wanted to put down. But let's say that down payment money is coming from the sale of your current house. So now you know that on January 30th, when you take possession of your new house, you need a down payment of $60,000, but you know that you're not going to get that $60,000 until February 15th, which is when your current house actually closes, and that's when you get the money from the sale of your current house. So that's when bridge financing comes in. So on January 30th, when you get your new mortgage, you would also get the down payment money from the bank that's giving you the mortgage. So not only do they give you the mortgage, but they would also give you the down payment on January 30th. And then when your current house sells on February 15th, then you would have to give that $60,000 back to the bank, because they gave it to you for the down payment, and you'd give it back to them on February 15th. So that's called a bridge. So bridge financing is only typically for the down payment money, and normally the interest rate on a bridge is around 7%. However, it's daily. So from January 30th to February 15th, for example, at 7%, $60,000 daily is about $11 per day. So over the 15-day period there that you did the bridge for, it would probably cost about $175 or so in interest. And then there's also an administration fee, normally of around $250 or so. So the total cost for that bridge would be, say, around $250 for the administration fee, plus around $175 for the interest for those 15 days on the $60,000. So if you have any questions on that at all, just give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.